Hello and welcome to this presentation outlining the key elements of the IAASB's Exposure Draft ISA 570 Ongoing Concern. My name is Anne Waters and I am a Deputy Technical Director at the AUASB, and I am joined today by Rebecca Maddox, who is an Assistant Manager at the AUASB. You will see Rebecca in a moment when she presents. At the heart of every financial statement audit is the question is whether an entity will continue as a going concern. This is arguably the most important consideration for preparers and auditors to get right. Users want and expect to be fully informed about an entity's risks, which may ultimately result in the entity failing. And they want a warning, they want adequate and appropriate disclosures in the financial statements, and auditors have a key role to play ensuring those financial statements adequately disclose matters relevant to going concern. So the AUASB has recently issued a consultation paper to expose the IAASB's ED, and we're requesting feedback from you to inform us as we respond to the IAASB on their proposed changes to ISA 570. The changes in ISA 570, proposed in ISA 570 will impact every audit. So we want auditors to really focus and provide that feedback to us. Today's presentation is only a brief overview of the proposed changes to ISA 570. So please have a look at the exposure draft in detail and share your views with us. Today, we'll look at why ISA 570 is being revised, an overview of the key changes, and our consultation questions and timeline to enable you to provide us feedback. Why is ISA 570 being revised and what's been the journey? So as part of the auditor reporting project, there were changes made to the auditor's report in relation to going concern. So the main change was the introduction of the material uncertainty related to going concern paragraph. In addition, there was an additional requirement for auditors to look at to assess the adequacy of disclosures where there was events or conditions which may cast significant doubt on the entity's ability to continue as a going concern. So that was in 2015. Since then, there's been a number of high-profile international corporate failures, such as Wirecard and Carillion. So there has been a focus on going concern, were the disclosures adequate, and where were the auditors? In addition, we've had continuing economic uncertainty, which has increased the risk of going concern for many entities. And we also had COVID-19, which obviously created some going concern issues for a number of entities and significant uncertainty. In 2020, the IAASB were receiving feedback and noise that there was a need to look at the going concern auditing standard. They issued a discussion paper which related to going concern and fraud, asking for feedback in relation to whether there was a need to update the auditing standards. Based on that feedback, they commenced a project to revise ISA 570. In 2023, they have issued an exposure draft, and that's what we're talking about today. So the comments are due the 24th of August, and we will provide an overview of the main components of that exposure draft. So when the IAASB commenced the project of revising 570, they had three main objectives, which were to promote consistent practice and behaviour in identification of risks relevant to going concern, to increase the robustness in relation to evaluating management's assessment, and to ensure that to consider whether there was a need for transparency in the auditor's report about how they have addressed going concern. So those are the three objectives that the AUASB are trying to achieve in this exposure draft. Looking at the exposure draft, the overall objective of the auditor has not changed from the current ISA 570. So that is to obtain sufficient appropriate audit evidence and conclude on the appropriateness of management's use of the going concern basis of accounting. to conclude whether there is a material uncertainty in relation to going concern or not, and then to report in accordance with this ISA. So those three objectives have not changed. What has changed is the detailed requirements that the auditor needs to fulfill to meet those objectives. I will now hand over to Rebecca, who will go through some of the key changes.
Thanks, Anne, and hello, everyone. So as indicated, I'll now take you through an overview of some of the most significant proposed revisions to the Going Concern Standard. So firstly, there is an alignment to ISA 315, so there are more robust risk identification and assessment procedures requiring auditors to design and perform audit procedures to support their risk assessment. The auditor must also obtain an understanding of the entity, its environment, the financial reporting framework, as well as the entity's system of internal controls. The next change is with respect to the timeline for assessment. So this has been extended to be at least 12 months from the date of approval of the financial statements. We will have a closer look at this later on in the webcast. The next is that there is more robust requirements in evaluating management's assessment with respect to going concern, whereby the auditor must evaluate the method, assumptions, and data used by management. So this is another issue that we'll look at more closely later on in the webcast. There are new requirements for communicating with external parties to evaluate their intent and ability to provide or maintain necessary financial support. Material uncertainty related to going concern is now defined, and other terminology used in the standard has been clarified, such as events and conditions that may cast significant doubt. And finally, there is enhanced transparency about going concern in all auditors' reports, especially for listed entities, and this is another area that we'll look at more closely later in the webcast. So Anne will now discuss three of these key changes in greater depth.
Okay, so the timeline for assessment in proposed ISA 570 has been extended to be at least 12 months from the date of approval of the financial statements. However, in Australia, we've always had the relevant period to be the date of at least 12 months from the date of the auditor's report. So those dates may or may not be aligned, and we are looking for feedback as to whether the AUASB should adopt the period proposed in ISA 570 or whether we should retain the period that's currently in ISA 570. One of the key enhancements in proposed ISA 570 is more robust requirements in relation to evaluating management's assessment. So this is in recognition of the importance of management conducting a thorough assessment in relation to going concern. So there are now more detailed procedures. Now, firstly, there is a requirement to request management to perform an assessment. So that's upping the bar around what management need to do in all audits. Then the auditor is required to design and perform audit procedures to evaluate that assessment, and then which include evaluating the method management have used, assumptions, and the data they have used. So that's significantly increasing the requirements for all audits in relation to going concern.
Okay, lastly, concerning increased transparency about going concern in the auditor's report. So as you can see here on this slide, there is a table which provides an overview of the audit report disclosures proposed in the IAASB's exposure draft. So the key change is that under the revised standard, auditors will be required to provide explicit statements about going concern in a new section titled Going Concern. So in this particular section, the auditor will state that they have concluded that management's use of the going concern basis of accounting is appropriate and that no material uncertainties exist. So when events or conditions have been identified that may cast doubt on the entity's ability to continue as a going concern, but there are no material uncertainties, the auditor is still required to include this going concern paragraph But for listed entities, they're additionally required to reference any related financial disclosures and describe how they evaluated management's assessment. And finally, when there is a material uncertainty related to going concern, the audit report will contain a material uncertainty related to going concern paragraph as in the current standard. The only additional requirement is that now for listed entities, the auditor must also describe how they evaluated management's assessment. So the main message here is that there will be a going concern paragraph in all audit reports to address stakeholder requests for greater clarity and transparency for when the entity's going concern status is in a no material uncertainty stage. And this is to provide additional clarity about the auditor's conclusions in relation to going concern and for listed entities, what they have done to form their conclusion. I'll now take you through some of the examples of what the auditor's report might look like. So this particular slide highlights the difference in reporting requirements between the current ISA 570 and the proposed ISA 570 in circumstances where there are no going concern issues. So the auditor is not required in the current ISA 570 to report on going concern in all audit reports, unless there is a material uncertainty related to going concern. The proposed standard, on the other hand, requires auditors to report on going concern in all audit reports by the inclusion of a separate section titled Going Concern. So this next example highlights the difference in reporting requirements between the current ISA 570 and proposed ISA 570 in circumstances where there are events or conditions that may cast doubt on the entity's ability to continue as a going concern. So the auditor is not currently required to report on events or conditions that may cast doubt on the entity's ability to continue as a going concern under the current ISA 570 in situations where there are no material uncertainties, but the proposed standard does require auditors to include this generic paragraph on going concern in all auditor reports, and additionally for listed entities to also draw attention to any related disclosures in relation to events or conditions, and to also describe how they evaluated management's assessment of going concern. So this final example highlights the difference in reporting requirements between the current ISA 570 and proposed ISA 570 in circumstances where there is a material uncertainty related to going concern. So currently the auditor is required to report on material uncertainties in a section titled Material Uncertainty Related to Going Concern. So this paragraph is still required in the proposed standard, however is extended for listed entities by also requiring the auditor to describe how they evaluated management's assessment of going concern. So as you can see, the proposed ISA 570 introduces differential reporting requirements for listed entities, and we are interested in your views on whether or not this differential reporting requirement is appropriate, or whether the additional reporting requirements should be required for all entities or none.
So that concludes our webcast. I just want to quickly go through the consultation timeline. So the exposure draft has just been released. We will be holding some roundtables during July, August. We know it's a very busy period. However, the IAASB comment period closes the 24th of August, so we're sort of hamstrung a little bit in relation to the timing. So our period, we are looking for comments by the 14th of August. Please provide those comments in writing via email or a more formal letter, and please attend our roundtables. We will communicate those dates ASAP. Thank you, everyone. If you have any feedback or any further questions, please contact us via AUASB inquiries on our website. Thanks, and thanks to Rebecca.